Good afternoon, ladies and gentlemen. This is Clueless Trading Frank. It's November 4th. Countdown to U.S. presidential elections next Tuesday. We have approximately 24 hours. That's in business hours, trading one trading day, Monday, prior to the huge event that's going to take place on Tuesday. We'll obviously not find out till late Tuesday evening, possibly till Wednesday morning. Whichever the case, I find it to be extremely critical that I have this quick forecasting session based on what we encountered during Brexit, because that's our only comparable at this point from a technical standpoint. And so far, what I've been saying is coming to fruition. I hope some of you got in on those scalable SPX puts. Those things are ramping right now in a big way. I believe they're up about 30%, if not 35 to 40%, just in the past 25 minutes or half an hour since I alerted my members to take protective hedges. All right, let me just get straight into this. What you're seeing behind me is just one of my screens. Sorry, that was my mouse falling over. And you see that I'm monitoring, as I always do, for my benefit and the benefit of all my traders and members, tactical points. And this is, of course, the Thinkorswim version. You also use the Quad Algo HFT platform, which itself is phenomenal. And I've posted considerable charts on that every single day, even today, showing that both the fast and slow stochastics were overbought, and to basically take manage your own profits, move large profits off the table that we even intraday traders got right off the bat as we were heading towards that overbought zone, and that's that's just the way trading, well, active trading is done. All right, and that's really as simple as that. Very profitable even in difficult markets, and but of course that's I try to do my best. A couple of quick things here. Look, we all know it's been a horrendously difficult market, both on the long side and the short side. Somebody might say, oh, wow, how can it be bad on the short side? Well, it's bad on the short side because in every single day, if you came in short, you got blasted. And the markets opened up. You got some reversal candles every single day, and then the market started to come down. Now, as humans, we can go with our feelings. Like we can say, oh, we know market goes up till 12 noon, then come down. To me, that's all kind of hogwash, okay? Because what really matters is that if you follow all the tracking charts that I put out there, mimic those on your screen, and use the same type of parameters and indicators, you'll pretty much know when the markets are overbought. And when the markets get overbought, the algos sell. Look, the algos don't know Trump or Hillary or Johnson or whoever the heck's out there and what they are. The algos are amplifying moves within the market. They are looking at robotic technical indicators that are programmed into the black boxes. The algorithmic high-frequency black boxes, and the minute they hit there, they start selling. One of the most important lines that I keep on showing all the time is the pivot. Now, the pivot is not shown here. It's shown on my Quad Algo HFT, and once you cross over the pivot, the algos start buying really hard, and you can tell when it's trying to get towards the pivot. I show that clearly every single time. If you break below the pivot like we have right now, the pivot on the SPX was, as I showed earlier, was 209.16. And remember, these are dynamic levels, right? So they'll move back, they'll move up and down every single day, and automatically generated by the system. That's why the Quad platform is so brilliant. So anyway, you can use that on your platforms too, whichever one you use, if you have the pivot function. So now that we broke below the pivot at 209.15, they're selling. They're selling hard. Now, based on the candle dynamics, you can also do a visual movement of the candles. Let me start off from the bottom. This was yesterday. The room was dead quiet. Nobody out there. That's the emotional human factor of it. I understand. Of course I do. And so this was a point of maximum aggression. This was the point of maximum aggression, because at that point, at around Thursday, let's say when we I'm sorry, when we were down about 270, McClellan oscillator was minus 270 and stuff. You know, my charts are, I posted that. Just scroll down and take a look at it. I don't want to rehash the same stuff. That's the point of maximum aggression, okay? And then you start to see a positive divergence, because by 2 o'clock, 3 o'clock, the McClellan oscillator was actually at 17 while the market was selling off. That was a positive divergence. I talk about that too, clearly. And of course, explained that very much in detail in my advanced coaching sessions, which I take a lot of time doing. I'm going to be holding one tomorrow afternoon, probably around 1 p.m. And all enrolled students are more than welcome to participate in it and sign up for it, because they're worth it. I don't need to sell you on that. Okay, it'll save you a lot more money and make you lose a lot less, and make you more. So saying all that, point of maximum aggression, and then the positive divergence, minus 276, minus 280. Guess what happened today? While we think, though, while the average Joe out there, whether it's on StockTwits, whether it's on other forums, saying, oh, market's going higher, market's going higher. Oh, look at that. We're down 5 right now. We just gave up how many points? 70 points almost. So, and those puts, I'm not even looking at them because they're flying. So the point is that it got up there at 290, 296. So in one single swoop, okay, in 24 hours, we went from being down 280 to plus 280. That's 100% statistical divergence on the upside, right? So if you want to look at it from a stochastic deviation, we went up 100% from the bottom on the McClellan oscillators. So what do? Chase things? Yes, you can. Yes, you can, if you see the pivots being held and certain levels being taken out. And I mentioned all those. I said if we get up to 2104 on the SPX, and we break out above that, so basically you sell all your shorts, and you basically go long, till the right last, probably till the end of the day or so. But that didn't happen, right? That didn't happen. We hit that mark. And we hit 2099 on the SPX. Couldn't even break 2100. But those are numbers. So change your thinking. Gotta think technical. Gotta think robotic. Doesn't matter how hard this business is. Believe me, it's been hard on me too. I've hit a couple of fantastic runs in individual stocks and stuff, and made some tactical moves. But hey, it hasn't been fun because I've taken some lumpy losses too. But net up, because I keep on adjusting my portfolio depending on the circumstances. You all got to do that. This is not a linear market or a binary market where one thing just keeps on going higher, or keeps on going lower. The time will come. It'll come from lower levels, in my opinion. Okay? It'll come from lower levels. The second part of this session, I'm going to talk about what we might expect. If Trump wins, the initial reaction is going to be down. This is an apolitical statement, okay? This has nothing to do with whether one likes Clinton and one likes Melania. I'm just kidding. I mean, Donald. Just kidding. Right? So the point is that it's a question of how the markets are positioned. Look, I still remember Brexit. I had asked people to take down positions right before Brexit because we had reached that certain level up there. I think it was 2170. I can't remember what it was, but we'll see that in a second. I ran off to be at my son's high school graduation that day, around 3:45, 3:50 p.m. And had a little bit of the SPX puts, which went up 600% the next day. So hedges are critical. Forget about polls and all this garbage. If the people show up and they vote one person or another in, they'll do it. Saying all that, look what's going on in front of you right now. This is not rocket science, okay? I self-taught this myself over years. And nobody sat me down on a webinar session in the middle of a trading day to explain to me what's going on. Look at what's going on here. You see these lines get up to overbought. There's a high probability it's going to reset. This is a 1-hour chart on the E-minis. This is the TFs, the Russell 2000, which we did extremely well on earlier, right? That's what you got to do. Then you go short, and then look what's happening. Now we're going to reset down here, and then we'll see what happens. But look at these McClellan oscillators. They're still up there. That's saying that, yes, this is a price function. Maybe the big boys aren't really heavily selling, because if they were, then these McClellan oscillators would be shrinking really, really fast. But if you look at the candle, what I'm seeing on my one of my other monitors on the 5-minute, this is a straight line down waterfall decline. We're down 18. I'm not even see where my puts are. I'm not even tell you guys unless you guys got in. So the point is that let's move on to what I think might happen. But I'm just, look, I've gone through this so many times, but it doesn't matter what I ask you guys to do. It's what you guys really want to do. If you want to practice technical analysis and the discipline of how I look at things and use your own gut feelings and stuff, and some of you are a lot smarter than me. When I say go long, you might go short and make a lot of money. It's good. Use me as a resource tool, not as God. There is only one God, right? That's it. So the point is that just do what you need to do. Now, saying all that, the Dobbers box is getting hit down here. There's a lot of different things that's going on here that that I explained very clearly on the ACS, so I'm not going to get into it right now. Now, let's take the bigger picture of what might happen. Now, I showed that on my charts. I called it the BREXIT chart, right? And BREXIT as in Brexit, like Trump exit, if Trump wins, initial reactions, what will happen. After that, I think the markets are going to be fine. That's my opinion. So here is what SPX. All right, let's go back. Let's remind ourselves. Okay, there we go. By the way, just one thing to remind everyone, because humans have memories like a little pea-brained, little gerbil or whatever, because honestly, none of you, in many cases, I don't even remember, but I remember more because I do this as a full-time thing. This was the horrific crash back in the 1800s, okay? And that had nothing to do with Trump. I mean, that had nothing to do with Brexit or anything. This was back in January, and then the double bottom in February. We were there, and we caught it. All right? So let's see what happens now. So let's kick off from here, from Brexit. So here was Brexit. Here was the big candle the day before. It was reaching to my level, which I was looking at around 2120. We got that afternoon on the 23rd to 2114. Read my post from that time. You can scroll down and find them. It's all there. I don't delete emails, right? Just kidding. I don't delete my posts. So the point is that you got up there and they're telling you the polls, they're going to win this and that. We're starting to see a reversal candle here because the market is trying to get back to pivot. But we'll see. So anyway, and then comes Brexit. 960-point drop from here to here. While they were saying, oh no, the Remain campaign people are going to win, the UK is going to stay within the framework of the European Union, all this stuff. Bang. You had to react fast. You had to react fast. If you were positioned here, you would make 1,000+% on your money. Reversal candle huge, and if you sat around thinking the market was going to go lower, and I really thought the market was going to go a bit lower, but it didn't. It turned, so we adjusted. And then you had this monstrous 3-candle move, which was good for probably 800 points. You could have made another 1,500% on your money. You don't have to play with big money. You can do it with small money. It gets big. So what I'm thinking, which I've explained, and now I'm going to show that, is that what if you look at this chart, this is definitely not a good looking chart. It's not a good looking chart, okay? And this candle here, like I said, we would have to break above this 2104 level or so up here in order to change the trend, okay? In order to change what we call a trend reversal. This is a daily, so it's so if we end up the day today, anything can happen. So I'm just leaving it up. If we end up the day today above the 2104 level or thereabouts, then that's a trend change. That means somebody knows something, the big money knows something, and they're lumping in. That means we're going to retest 2140 by as early as Monday morning, Monday afternoon. Now that's only if we break, let's say, let me give it some leeway, let's say over 21.15 today, because that's the trend change. We got 45 minutes. Believe me, it can happen in 5 minutes. You guys all know that, okay? So that's got, it's just, machines are way too fast. So bottom line is, but let's see, but that's not what we're seeing right now. So here's the first sort of scenario. Let's say Trump wins. We are going to retest, in my opinion, the 1990 level, because it's not just it's going to go to 2000 and just immediately bounce. It'll be a bang, just the way Brexit happened. Bang! It just, you know, it'll happen. And remember, we don't get the results till Tuesday night, so after the market closes. So whatever futures action happens out there, it's not, you know, the big institutions, the mutual funds and stuff are not big futures traders. The hedge funds are. The hedge funds are. Okay? So those guys won't have time to react. This time, I will tell you that most large investment banks from here to Dubai to Hong Kong to wherever are prepared. They have hedged. But hedge or no hedge, just like in life, you might know something's going to happen, but when it happens, you're still going to feel the hit. You're still going to feel the hit, right? That's just the way life is. So the same thing with markets. So I expect this level to hold, which is around 1990, around that level, or 1980. Don't get specific with that, but, you know, around there. And then if we are going to pull a Brexit, you got to react to it fast by Wednesday. By Wednesday, if not, yeah, by Wednesday. And then if you see that type of reversal, then it's going to be humongous. I don't want to get into the real political game theory aspect of the whole thing. The Republican Party and the Democrats, they are politically very astute. They know, and this is just my theory, that if the markets completely collapse right after any one of them win, and the bet is that if Trump wins, the market's initially going to come down. It does not look good. Mom and pop can support you all you want. Make America great again. But if they see the few dollars that they have to their mutual funds or their 401ks or their pension funds lose 20% of their value, they're fickle. They'll change their feelings. All right? So my feeling is, they might not crack the market down 500 points, but I'm just showing you what can happen. So if this happens, and it's not just us, remember, it's the world markets which don't fully understand the dynamics of what's happening within the U.S. political framework, the elections. You know, they're using all kinds of, they have their knowledge, they're using all kinds of specialized think tanks to explain to them, so you know what's going on, this and that. We understand what's going on to a large degree, but a lot of the big money international emerging markets are not. So you got to understand that. So if they react really badly to a Trump win, because they're all scared stiff that he's going to completely stiff them, and which he's not going to do. So the point is that they're going to panic. So the initial reaction's panic. So this is a panic reaction that I'm showing you. So this will happen. Now, if Hillary wins, then you're going to see a initial blast up, which will be sold. So that means that we are going to move fast and furious. And remember, we are deep oversold. You can see that clearly on the daily. You also see it pretty clearly that the McClellan oscillators on the daily are starting to shrink. Good stuff. Because the big money is placing their bets in many different ways. So it'll be a fast move up, real fast, up at Darvas is 2130. It won't stop at 2130 because the pressure is going to be so high because there's a lot of money. There's God knows how, like $1 trillion sitting on the sidelines. They'll rush in because everybody's a frigging day trader, right? Because they all want to get in there and make money, just the way we saw with the biotechs this morning. Look what happened with Regeneron. You don't think that was day trading? That was day trading to the extreme, which I identified and gave it to you guys on a silver platter. So that's done by hedge funds. So saying all that, you get a move up here, 2130, and best case scenario, the downward sloping 50 and 34-day moving average, which is approximately between 2140 and 2145. I am 80 plus 90+% certain. If Hillary wins, it's not going to be an endless ride up, okay? It's going to move up here if there's a big move up, and then you're going to see selling and hard selling. And then I'm going to show you all the different Fibonacci retracements of what those selling might be, but we might easily fall back and retest the 2020 after the big move up. So that's the initial reaction that's going to happen, in my opinion, on a Hillary Clinton win. All right. On a Donald Trump win, the scenario is that the generalized thought process is that, and that's the reason why the VIX and the UVXY, VIX is actually up right now. Okay, VIX is at 2240. I showed that chart before. You know, it wasn't breaking down. That's why I said buy some UVXY calls. If you look at the daily chart of the VIX, it shows it wants to go to 27 to 30. That's, you know, that's 15, 20% from here, or 25% from here, higher. Short-term charts can be, you know, are being so, I mean, kind of reversal candle. But the daily charts and the weekly charts are telling you higher. So you got to respect this stuff, you know, because I'm a tactical bull and a tactical bear, with the belief that once markets settle, they will bounce hard, and it will bounce so hard, like the way we did it here, because I've been doing this for a long time, that if you're not in it at the early stages, you're not going to win it. So you got to be, speed is important. It doesn't mean you have to be like a nanosecond trader, but you need to look at the charts, make a determination, get in there fast. Small amounts, that's it. Saying all that, so it'll get here of 2130, around that level, max move in my opinion. So that's roughly about what, 180 points on the Dow, okay? And then they're going to sell it, because profit takers will come in. Best case scenario, a retest of the 34 and the 50 at around the 2140 levels, ladies and gentlemen, and that's on a Clinton win. On a Donald win, this is the, in my opinion, the initial worst case scenario is we drop fast and furious. You know, we are here at 2090, we lose 90 S&P points. That's roughly 500 points. Okay, so that's roughly 500 points. You got to position yourself. That's what we're going to talk about now. So 500 points from here, and we are at 2090, 30. That's 40 points here. I mean 500 Dow points. And from here to 2140 is 50 S&P points. 50 times 5. So you're talking about 250 to 300 plus on the upside. Okay. So if you do the math, it's a smaller upside than a bigger downside, right? It's just the way it is, because the technicals. I'm looking at the technical, and I'm making up these numbers. Best case scenario, let's say we go and hit the junction, the intersection of the downtrend line, okay, the red line, and the uptrend line here from Brexit and lower. So that junction is around 2150. And if somebody tells me it's going to blow past that in a straight line up, well, I don't think that's possible. But anything is possible. The world markets heave a sigh of relief. It could be up frigging 600 points for all I know. And it all depends on the size of the victory on one side or another. Let's say at this time we're talking about upside, like initial reaction on Clinton, but I don't think so. So how do you position yourself? Because that's really what it comes down to. Guys, sometimes, you know, I'm a pretty simple guy. So the way I look at it is Monday's coming up, right? What do you think? Everyone's going to be super excited. Market's going to be up 400 points. Yeah, maybe if it leaks out that Clinton actually got most of the mail-in ballots, she won 70% of that. Yes, the markets will open up 100 points on that note. But barring all that stuff, there's going to be some major nervousness on the markets on Monday. Simple. Ask your kid. He'll tell you, or she'll tell you, right? I asked my son. Smart kid. You know, just got into college. You don't give a crap. He's like, yeah. You know, like the simple answer was, yeah, of course the markets are going to be nervous. It's Monday before the biggest and the most critical election in recent U.S. history. So my feeling is we're going to open down on Monday. So where do we open down on Monday? Look at my charts. I'll tell you, look at my charts, and I'm going to be posting a couple before the market closes. I did a megaphone chart. Look, I do all this stuff not just for my edification, because I can look at this chart. I don't need to draw lines to get a feeling of what's going on. I do all that stuff so you guys can benefit from it. So I keep on, pushing you guys to focus and do all that stuff. It's for your own good, not mine. Trust me. So on the downside, based on my estimation of looking at all my different screens, I'm looking at a SPX, which at this point, according to the quad resistance, is 2072. I put a chart out there on quad saying election unknown. It's right there. Okay, it's right there. The one with the red. This one. Okay. Trust me, I've done these charts a lot of times, and I would say a good amount of times these scenarios have come right. So election unknown down here. So the point is that that we could just on the natural push down on the market, we could open down maybe 20 S&P points, so 2090. Let's go back and retest the lows. Remember, lows are not retested once. They're retested twice. Now, we already did that on the hourly, but on the daily, if we retest the lows again, then we are looking at I'll just tell you 1 second what this shows me. And the algo charts are pretty incredible because the pivot lines on the downside are now sloping down. Not pivot lines, I mean the support lines, the red lines. So it's showing 2063. There's a gap fill at 2040. 2040 on the S&P. There's a gap fill. Okay? The Brexit gap fill right there. Let me bring that back in again. Let me make it bigger. Right there. Okay, 1 second. This is just a lot of stuff. So, unless you guys really look at it yourself, I can't sit here all day explaining all this stuff. But it's important. So there's a gap fill. See this line here? This line wasn't drawn to make the chart look prettier. It was drawn because there's a gap fill here. That was the first gap fill after the first reversal candle after Brexit. That gap fill, ladies and gentlemen, is 2037.90. Let's call it 2037. All right, 2037. 2037 is 50 points, 53 points from here. 53 times 5 or 6, that's 300 points. So that could be the first stop. We don't need to drop 500 points. We could go to down 300 points. Because remember, the market is completely news-driven right now. So if a news comes out that, okay, Trump is now leading in this state and he won North Carolina, he won Georgia, he won Florida, whoa, the market will be down 300 points on Monday before you can even say hello. All right? So bottom line is that there will be action prior to the election. Now, if a lot of selling happens on Monday, just hypothetical scenario, and we basically come down and fill this gap, let's say. Remember, there's a reversal candle here that's around, I'm showing you around 20. Yeah, that's pretty much around here. This gap gets filled. Gaps, one with the other, do get filled. So I wouldn't be surprised if this one does at 2040. That gap gets filled on Monday. All right? And we're down, let's 160, 170 points on Monday. That's taking a lot of pressure away. Do you understand what I'm saying? It's taking a lot of pressure away. It's like a stock before earnings. Down 15, down 20, and then earnings come out and they have a slight beat. It's already given back 20 points. It goes up 40. So net, it only went up 20. Do you guys all understand that? If a stock is down 20 before earnings and it goes up 40, it only got back 20 more than what it lost. So same thing with markets, that if we fall into and fill this gap here, it's taking the pressure away from these lows, which looks like they might get tested, the 1990-2000 lows. So then they only have to fall a little bit more before we get a vicious bounce. One way or the other, we are going to bounce after the fall. Now, whether that bounce comes after the first red candle or the second red candle, can't tell you now. If it's one red candle straight down here, buy the crap out of the market for the next, God knows, maybe 5 hours, 24 hours, like I say, because by that time, the internals are going to be screaming blood red. VIX is going to be up to 30 plus. UVXY is going to be up to about 26. I showed that on a chart too, so please take a look at it. Every chart means something to your P&L. Keep on disregarding it at your own peril. It's not there to give you exactly like, okay, if you just do this, it's going to make you money. You got to use that as a tool, as an effective tool to make money for yourself. It's a very difficult market. A lot of professional traders, I have hedge fund friends still keep in touch with, they're not even trading. Okay? So, and we're still trading in between. Not crazy, as you know. I've told people to tone down. But we're catching some real nice moves here and there. So point is, the strategy. This before I should tell myself, stay on the point. That's what Trump said, right? Stay on the message. Stay on the message to Clueless Day Trading traders. They're good people out there. They all want to make Clueless Day Trading great. I know you guys do. All right. So saying all that, the strategy would be to buy at this point, a November 11 call, whichever strike you prefer. Yeah, they're expensive. They got fat premiums now, okay? And buy in November and buy some November 7 puts. Or don't buy any calls now. Forget about, say that, okay, if Monday things go up, then I'll see what I do. Buy some puts for Monday, the November 7th. I suggested the November 7th, whatever it was, and I know they're up quite a bit right now. I suggested the November 7th, 2095, 2090 puts. I'm at 2089. Okay? And, or you can say, all right, he showed me this thing here. Looks like we might fill this gap. Buy the 2080. That's only 9 points away from me. We might open down 20 S&P points on Monday morning. Sunday night we'll find out. Or we might open up 20 points. But I'm just saying, from a hedging standpoint, you can buy some, write this down. You can buy the Monday, that's November 7th, strikes on the puts. Okay, November 7th. So I'm going to put 11/7. Buy whichever puts you can afford or whatever you want to do. All right? But you buy the SPX or RUT puts. I'd stick with the SPX. Don't go overboard with too many indices. SPX puts for Monday with a higher weighting on this, and then you can buy a corresponding call. But don't buy the corresponding call, mind you, for Monday. Buy it for the end of the week, and that's why I said November 11th. So if you want to stick with the November 11th call, you don't want to buy it way out of the money. 2130 is fine. The market will bounce up 30 S&P points real fast. But don't buy like 2170, 2150, that type of stuff. Or buy in the money. I know they're expensive, so buy one. Because that one's 1100 or 1200 you're going to pay for it is going to be up to 4,000 bucks if the market ramps. Buy Friday. So November 11th is Friday. Or you can do 11, or you can buy the November 9th, which is the day after the election, because by then we'll know. You can buy the SPX calls. Now, how you basically wait out the whole thing, that I can't tell you, because I don't know the exact outcome of what's going to happen on Tuesday, right? So I would say that if you want to stay away from the calls, it doesn't hurt. You can always jump in and buy higher, because when the market turns, you will have time to buy something on Tuesday, because the results are going to keep on coming in all through the day, right? So if it's leading towards Clinton and stuff, you're going to see the market react. So you'll have time to buy the calls, in my opinion, on Tuesday. On Tuesday. But on Monday, I would say that the higher weighting should be on the puts. Look at markets. All right? I could be wrong, but I don't think I'm going to be that wrong. So for Monday, the day before the elections, and you might want to check with your financial advisor, aka your 7-year-old daughter or your son, okay? They'll tell you. They'll give you the answer. I think markets are going to be very nervous, and so will world markets be nervous. Because this is not just about people's aspiration who they want as president. It's about the economic system, which is very nervous of what the implications of a new presidency could be. So Monday is nervous time, in my opinion. And if it's very euphoric time, I'll short the market on Monday, because I'll tell you one thing. They were dead wrong on Brexit with all the garbage polling and stuff. And these were bettors in London. These guys are hardcore. You guys ever been to London? Or, you can, they are the biggest. They bet on everything. They bet on everything. They'll bet on Lindsay Lohan. All right, when she's gonna crash her next car or do another fat line. Just kidding. But seriously, so they'll bet on anything. So point is that they were wrong. When you deal with human beings, they'll never always tell you what's exactly in their heart. Same thing with traders. Same thing with markets. Markets will never give you a signal of what they're going to do before they do it. But by studying the pure technical aspects of the market, as I do every single minute, okay, you do have a slight edge. Even then, I didn't expect the market to fall this hard so fast. So, saying all that, Monday is nervous time, so you might be more weighted towards the puts. We'll have time on Tuesday, starting at 9 a.m., 9:30 a.m. Eastern time, start filtering the results of what's coming in. We'll have time to buy the calls. Or you can buy a call, or we buy the long side of the thing and say, okay, I'll add to the calls when I see ready. But generally, the weighting should be on the short side, because look what's happening in front of your eyes as I'm doing the session. And this is called live. Ladies and gentlemen, this is not Saturday Night Live. This is Clueless 8 Trading Live. This is now turning into a reversal hammer. Can you see that? On the daily. Let me show you what it's looking like on the E-minis, because that's not good. That's a reversal hammer. Okay? This would have been a this is an inverted hammer. My apologies. This would be a hammer reversal in green, but it didn't happen. And there's a technical reason behind it too. There's a lot of institutional margin calls. Look at the VIX and stuff. They're going through the roof. We're down 30. There you go. All right. And now let me show you on the E-minis, and I'm going to wrap this up. There's still people say, "Oh, I'm too late." It's too late. I don't think so. I think that the markets. Let me look at my chart before I say. Nope. I'll post this chart right after this webinar. The slow stochastics are now just turning and about to break down below the uptrend line. The fast stochastics now are almost fully oversold. We might get a double bottom bounce at 208.38 on the SPYs. However, this is the matrix chart that I've kept on showing, right? I call it the matrix. All I did was draw a lot of channels. Takes a little bit of skill, mind you. So when you look at this, and you look at, let me do this. Okay. Here was Brexit. Here was the September drop down. So when you look at these channels are drawn with precision. I'm telling you right now, every single line means something. This line is 2065 on the E-minis. That's 2070 on the SPX. This line that we're resting on, you can clearly see it's highlighted right there, right there. All you need is 2 large screens to track all this stuff. And this is the inverted hammer. Not good. So will it hold this? Anything can happen. This line was drawn because this was the last point of max reversal right there, back on the 5th of July. Not that anyone remembers what 5th of July looked like. But this line here is where he had the real reversal candle. That was on the 6th of July. Where does that coincide with? It coincides with channel number 2. Channel number 1, downside channel 1, 2. Where is that? 2065. I think there's a pretty high probability we get to 2065. If we break down below 2065, then you got a wider channel. And these channels have been drawn at points of inflection points that I picked and I drew automatically. These are all parallel channels. The next level is down here at 2022. Okay? Remember, pattern symmetry. I explained this a long time ago. Of course, we don't have the luxury as we have to pay our bills every single week. That's why we trade. Otherwise, you could have stayed short from somewhere around here, despite these big 200-300 point type of reversals, because this pattern looks likely to be revisited. And that would be a phenomenal, in my opinion, buying opportunity. That's basically it. Pattern symmetries have a weird way of transforming. When this happened, it was humongous. 90% of you missed this move, even though we were in here. Not at the bottom, but close to it. And I kept on talking about the 2-3 candle move. And by the time some of you guys got in, I would say most of you, you were up here. And guess what? We had a nice little 150 point pullback. And then we just ramped again. So point is that if this can happen, a 700 point move over 4 days, why can't we get a 700 point move in 2 days? End of story. That's all I got to say. So just to recap, you want to be biased short going into Monday. Puts, whatever instrument you want to use, UVXY, TVIX, you name it. Markets are under pressure. You can see that clearly. This is a bear flag, which looks like it wants to hit the 220.60 level. So, and then you want to look into Tuesday and start scaling into the calls. The calls that you might have, you might sit back. You don't need to panic sell because you have to dollar cost average down. Got to have some cash on the side. I know it's been a difficult time, but ladies and gentlemen, what I'm telling you is gold in your pocket. That's all I got to say. Have a great weekend. I will be doing an ACS advanced coaching session tomorrow afternoon around 1 p.m. I'll put that up on the Twitter feed and in the chat room. Feel free to join and make sure you're an enrolled student by signing up for the 5-pack discount session. Thank you for listening. God bless you all.